please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning and welcome to Power Breakfast in the Mumbai News Center. I am Anisha Jain and with me is Nigel D'Souza. But first up, here's wishing all our viewers from the CNBC TV18 family, from you and myself, a very happy Dhanteras, and a very happy Dhanteras to you as well, Nigel. May it be very glittering for you. You are already glittering in gold, huh?
Absolutely, Anisha. Here's wishing all our viewers a very, very happy Dhanteras, and wishes to you as well, Anisha. And let's hope, I think it's about receiving done.
Yes.
I hope I'm on that list. But yeah, let's hope that we have a good trading session. The bulls have been partying, and that's where the done is.
Well, yes, definitely it has been an early Diwali for the bulls. Let's see how the day progresses. But first up, the top headlines at this hour. US markets hit record highs led by rally in financials. Asian markets rise in early trade as commodities held on to most overnight gains made on the back of better than expected China producer prices.
GST का जो revenue अभी तक आया है, whether we are able to make any sense out of it. I would say not yet.
And Revenue Secretary Hasmukh Adhia admits that it will take 3 to around 4 months to make sense of the GST revenue collections. Says that most of the tax revenue received so far falls under IGST. Also reveals that rates for items in the 28% tax slab could be rationalized, but remains non-committal on real estate and petroleum products coming under the GST ambit.
GST rollout has adversely hit revenue collections, tells the centre to states, makes it clear that devolution of funds will take place only on the 15th of every month till March 2018. Several states had called the deferred payment plan unfair.
And big ticket earnings today. Watch out for Axis Bank. The slippages from the watch list will be the key factor to watch out there. And expect a strong quarter coming in from ACC on the back of a low base and also on capacity expansion. However, subdued show likely from both Bajaj Auto as well as tech major Wipro.
Power sector's debt load may get lighter soon. Sources say 5 players are in the fray to buy JP's power assets worth around 10,000 crore rupees. That's an exclusive.
Well, the gains in the stock markets extended to Asia after fresh Wall Street record highs. Remember, most Asian markets, they trade high early this morning as commodities held on to their overnight gains. Remember, this is on the back of the better than expected Chinese producer prices. So on the back of that, we have the Nikkei. That's holding very, very mildly in the green. The Kospi, though, the last time I checked, was up close to around 0.2%. So let's pull up that market, and the other couple of markets as well should be up for you on the screen. However, if you just take a look at the SGX Nifty, well, early indications were maybe we'll start off on the back foot. So maybe a 15-point downtick is what we could brace ourselves for, maybe 15 to around 20-point downtick. But maybe that could be a buying opportunity, just going by the mood that we have seen in our own markets.
Well, yes, and the mood is similar on Wall Street as well. Remember, all 3 major US stock index rose to record closing highs, with the Dow Jones less than 50 points below the 23,000 mark. The S&P 500 finished around 0.2% higher, with telecommunications and financials leading the gains. The Nasdaq Composite as well gained around 0.3%. Now remember, investors will keep a close eye on the Senate this week, which is trying to pass a partisan budget blueprint that would help federal spending. The Republicans want to use the budget resolution to pave the way for the party to pass a major tax cut bill without any Democratic support. US President Donald Trump said that Republicans and Democrats in Congress are working on a short-term fix for healthcare insurance markets after he scrapped subsidies to insurers last week.
Meanwhile, President Donald Trump took 2 swings at drug makers over the high cost of medicines. Trump reiterated his desire to get the cost of prescription drugs way down, claiming during a Rose Garden press conference that the world is taking advantage of all these factors that are playing out. Let's hop across to a CNBC report on the same.
Today it was in the form of a surprise press conference in the Rose Garden. We had almost no advance notice that this was going to happen, but the president decided to appear in the Rose Garden alongside Mitch McConnell, the Senate Majority Leader. The purpose of this gathering today was for the president and Mitch McConnell to show the world that they've patched up their relationship after the president spent much of the summer, the tail end of the summer, tweeting criticism of Mitch McConnell and his what the president called failure to deliver on Obamacare repeal and replace. But today, the president also took a few questions. I had the opportunity to ask him about drug companies and insurance companies. On drug companies, he repeated this refrain we've heard from him before, that they are going to get drug prices down. Here's what he said.
Didn't speak to Mitch about this today, but a priority of mine, and you know that this is coming up, will be the cost of prescription drugs. We're going to get the costs way down, way down. And those drug companies, so you have the insurance companies in the one case. In the other case, actually, with regard to both, you have the drug companies. They contribute massive amounts of money to political people. I don't know, Mitch, maybe even to you. But I have to tell you, they contribute massive amounts of money. Me, I'm not interested in their money. I don't need their money.
Okay, let's get you some market opinion, global market opinion coming from Mohammad Al-Arian. Speaking on the record rally, he said that it would take a big surprise to knock the US stock market off its perch. Take a look.
The macro drivers of these markets right now are really strong, and you need a major, and I stress major disruptions or series of disruptions to get a meaningful correction. So you stay the course for now, but be careful about how much volatility you're selling and how much liquidity you're giving up. The marketplace has been conditioned now to buy any dip, regardless of the sources of this dip. Why? For one, obvious reasons, and because of two hopes. The obvious reason is that central banks, the Bank of Japan, the People's Banks of China, and the ECB continue to inject tremendous liquidity, and the corporate sector is flush with liquidity. Second, the global economy is slowly picking up. And third, there's a hope of this much-needed policy handoff.
Well, markets in Europe, in fact, they close mixed as investors monitor the latest in political news coming out of Spain as well as the UK. Now, remember, Spanish stocks were once again under pressure as the political uncertainty drags on. So that's the frontline indices. They ended mixed, but since we're talking about Spain, I think we should get the IBEX as well up for you on the screen. That was a relative underperformer for most of yesterday's trading session, ending with a cut of close to around 0.8%.
Okay, let's shift focus then to the currency space. The dollar held gains against the yen and the euro, supported by a rise in treasury yields following a report that US President Donald Trump was favoring a policy hawk as the next head of the Federal Reserve. Markets also took heart from Trump's conference, where he reiterated that reforms to tax policy would be completed by year-end.
Turning attention to the world of commodities and crude oil prices, they've given up some gains after closing at its highest levels we have seen in the past 6 months. This has Iraqi forces enter the city of Kirkuk, taking territory from Kurdish fighters and raising concerns over exports from OPEC's second largest producer.
Well, it's Dhanteras after all, so let's shift focus to the precious metal space. Gold turned lower, pressured by profit-taking after extending gains above the $1,300 mark amidst ongoing tensions over Iran and North Korea, as well as recent weak US economic data.
Dalal Street, the bulls are showing no signs of relenting. Led by large caps, both the benchmark indices continued to make healthy gains. The Nifty ended high with a gain of close to around 0.5% and ended comfortably above the 10,200 mark. The Sensex, well, it hit a double century yesterday, and the process, went on to hit yet another record high. Anisha, trade setups looking so good. Festive mood. How are you reading all the data points?
Well, yes, it's all about the festive mood. It clearly has been an early Diwali for the bulls, given the all-time high that we have hit both as far as the Sensex and the Nifty is concerned. However, just a tad bit of underperformance yesterday coming from the Nifty Bank and the mid-cap space. Remember, the advanced decline ratio was favoring the declines yesterday. Talking about the fund flow, it seems that the participation is coming only from the domestic flows, because yesterday as well, the DIIs had a net buy figure of around 272 crores in the cash markets and equities, while the FIIs continued to sell, and that sell figure was just around 30 crores. But still, basically, it's the domestic liquidity that the experts say is really pushing the markets higher. In terms of the global cues, yes, they are positive as well, because the US markets, they also continue to hit record highs day after day. Now, all the three major indices there were up anywhere between 0.2 to 0.3%. Remember, all these indices are up anywhere between 15 to 20% for YTD 2017 itself. Also to note that the US markets this time around would be looking on to the Senate, because they're expected to vote on the government budget this week. So that remains an important cue for that market. In terms of the European markets, they pretty much closed mixed. We had the FTSE closing in the red a bit, as well as the stocks was just about neutral. In terms of the global cues for the Asian markets, well, some important statements coming in from North Korea. They said this morning that the nuclear war may break out any moment, but I wonder whether the markets will take cognizance of that, given the fact that this is not the first time we are really hearing such comments coming in. But other than that, the Asian markets have opened pretty well, except the SGX Nifty, which is just a tad bit lower. We had the other markets that were doing well. So we have KOSPI as well as Taiwanese index and the other Nikkei as well as on your screen, all trading with gains anywhere between 0.02 to 0.2%. So clearly looks like a good day if you look at the important levels really to watch out for. Well, as per some of the experts on the upside, we have levels of 10 to 60 as well as 10,300 on the Nifty. That looks likely. People are saying that 10,400 cannot be ruled out as well this week. And on the downside, 10,180 to 10,120 is the range ready to look after.
What about stocks we should look forward to? Some stocks in news today?
Well, yes, quite a bit. It is earnings season and we have a whole host of earnings really coming in. As far as Bajaj Finserv is concerned, the Q-on-Q performance on the top line has been strong, but there's that bit of dampener coming as far as the life insurance profit growth is concerned, so that might just play out. In terms of DCB Bank, decent performance coming in there, profit just in line with expectations at 59 crores. The gross and NPA have also remained a bit stable, as well as the asset quality in terms of net NPA has stabilized a bit. Oberoi Realty, strong number coming in, profit coming at 104 crores versus an expectation of 95 crores there. Delta Corp, now despite GST there as well, the market cues, the numbers have been pretty strong, the margins have expanded and the profit is showing growth of around 41%. Onward Tech as well, good set of numbers, revenue growth of around 11% there. The profit of course grew on a small base. Saskin Tech, very good set of numbers coming in because the margins have expanded by over 400 basis points. The profit growth coming in at around 9%. Hudson Agro pretty much in line with expectations, with the profit growing around 17%. Persistent Tech, the dollar revenue growth came in at around 4.5%, so in line with expectations there. Hindustan Media as well, a profit growth of around 20%, so clearly that also is looking well. One of the exclusives that CNBCTV18 picked up is that 5 bidders are looking to buy assets for JP Power, and that includes the like of JSW Energy. So these stocks will clearly be in focus. In terms of earnings today, yes, a very earnings heavy day. We have all the big boys like ACC, Axis Bank, Bajaj Auto and Wipro coming out with results. And in the mid-cap space, some important names to consider: Aditya Birla Money, Atul Limited, Blue Dart Express, CRISIL, Ganesh Benzoplast, HT Media, as well as ICICI Lombard General Insurance. Nigel.
Okay, exhaustive list. Thanks so much for that, Anisha. Well, we'll slip in a short break, but coming up ahead, Revenue Secretary Hasmukh Adhia admits that...
Well, we can't make sense out of GST revenue collections right now, says the Revenue Secretary Hasmukh Adhia. After more than 100 days since the rollout of the Goods and Services Tax, Revenue Secretary, who was at the CNBCTV18 GST Town Hall yesterday, said that we may have to wait for 4 to 5 months to get a clearer picture on the trend.
GST का जो revenue अभी तक आया है, whether we are able to make any sense out of it, I would say not yet. क्योंकि जो भी revenue first 2 months में आया है, उसमें से अधिकतम revenue IGST में है. जी. Now इसका मतलब ये हुआ कि IGST तो एक तरह से देखा जाए तो interim kind of a revenue है हमारे लिए. जब तक IGST का परिवर्तन CGST या SGST में नहीं होता है, तो न हम उसको स्टेट की इनकम गिन सकते हैं न सेंटर की इनकम गिन सकते हैं। तो उस तरह से अगर देखा जाए तो हमारे लिए ट्रेंड अभी क्लियर नहीं है। हमको कम से कम 4-5 महीना वेट करना पड़ेगा कि ये जो IGST का एक्यूमुलेशन हो रहा है वो कहाँ रुकेगा और उसके बाद कब वो परिवर्तन होगा CGST SGST में, और नॉर्मल हमारी रेवेन्यू कितनी होगी।
Can we expect a substantial pruning of the number of items in the 28% bracket, sir?
देखिए, it is required. I agree with you, because the fitment of rate which has happened is mainly based on the excise duty rate on that item and the VAT rate on that item. It is being pointed out that it's a theoretical rate that we have derived.
Okay.
So there is a need for rationalization. Instead of doing a piecemeal reduction here and there, we do need to look at the entire list of 28%.
Okay.
But it will be done based on the principles which are now framed in the approach paper, which has been approved by the council. Certain principles have been derived, and based on that approach paper, the fitment committee will do its job and come back to the council. And also, it will have to derive the figure of revenue loss for that. Now, this exercise is going to be done, and there is a definitely future scope for rationalization.
The real estate sector, and there where the input costs seem to be going up, say for instance, be it cement, be it other paints, etc., which is really becoming very difficult in terms of costings for the real estate sector, so to say. When does one see a time frame of these exceptions getting included? And the follow-up is not just the real estate sector, but what about the others which has been left out, be it hydrocarbons or other sectors?
Well, when it comes to real estate being included, what it means is that you should be given a seamless credit of any taxes you pay on the real estate project in your business also. Now, for that to happen, we have to start taxing it from land itself. Land has to be part of GST.
Finance Minister seems to be suggesting that this may in fact be taken up at the next council meeting. So is that a realistic expectation that we could see forward movement on both real estate as well as petroleum moving into the GST regime anytime soon?
Even trying to understand what the issue is also a forward movement. We'll take up these issues, at least brainstorm, understand the various facets of this decision, and then take a view about it. Even taking a view that, okay, we'll reconsider after 6 months is also a view.
Well, buyers for stressed steel assets have been coming, but in a fresh burst of good news, bankers tell CNBCTV18 that buyers are making a beeline for the power assets too. CNBCTV18 learns that 5 bids have been placed for JP Power's assets. Nisha Podar has the exclusive details. Nisha, what do you?
It's 5 bidders in the fray for buying out JP Power's Power Ventures assets, and that's probably the reason why the stock was up in upper circuit today. And the 5 bidders include JSW Energy along with Piramal and Bain's special situation fund that they've created for stressed assets. Along with that, the other bidder that we gather is Resurgent Power, which is a joint venture between Tata Power and ICICI Ventures, India Power Corp, which is from the Shrey Group of Calcutta, Edelweiss ARC, which is looking very interested in this particular space, has also put in their non-binding bids. And amongst the foreign big investors, Brookfield has also put in its bid for buying out 3 assets of JP Power Ventures, which include Bina, Nigri, as well as Vishnu Prayag, with a total power capacity of 2,200 odd megawatts of capacity. Now remember, Bara project is not part of this sale process. So all these important bids have really come in. The lenders are expecting close to 10,000 odd crore rupees for selling the 3 assets of JP Power Ventures.
Well, thanks so much for that, Nisha. But let's move on then. JSW Cement is all set to expand its capacity from around 12.5 million tons to 20 million tons by 2020. I caught up with the company's MD, Mr. Parth Jindal. He clarified on their plans with regard to Shiva Cement and also emphasized on increasing their capacity utilization levels before they list on the Indian stock markets. Let's listen in.
Concrete HD is a premium slag cement that offers the highest one-day and long-term strength for the consumer. This is part of our larger vision of taking this company to 20 million tons by 2020. Today, as we speak, we're at 12.5 million tons of capacity with the Dolvi expansion. And our target is that by 2020 we would take it to 20 million tons and then go in for an IPO.
All right, so let's break that up then. We're talking about adding 7.5 million tons. What is the capex there, and how much of that happens organically and how much of that happens inorganically?
No, so the total plan to take us to 20 million is all through organic expansion.
Okay.
The total capex that we have envisioned is around 1,800 crores, and all of this would be happening over the next 2.5 years.
All right, and Mr. Jindal, since you are not a listed company, a couple of numbers that the street always looks out for when they're trying to value JSW Cement. If you could help us out, what is the EBITDA per ton in terms of an operational matrix? What is the target EBITDA per ton as well? And if you could help us out with what is the debt currently in the books?
Sure. So right now, as you know, we have 3 main products that we sell. One is our PSC cement, which is just JSW PSC. The second is Concrete HD, and the third product that we sell is GGBS, which goes into the RMC industry. On a blended basis, our EBITDA per ton is roughly 800 rupees per ton today.
Okay.
And our target is that by 2019, because we're entering into new markets in the east, which have a significantly higher EBITDA per ton, our target is to take this to between 11 to 1200 rupees per ton. To come to your second question, the current debt on our books is roughly 2,100 crores.
Okay.
And last year we had an EBITDA of 400 crores, and this year our internal targets is 550 crores.
Are you going to be looking at reverse merging JSW Cement into Shiva Cement?
There are absolutely no plans of reverse merging. Shiva Cement is too small a company for us to even think of reverse merging JSW Cement with. In the future, if JSW Cement does the IPO, at that point we could look at merging the two entities.
Okay.
But as of now, there are no such plans.
What about JSW Cement? When do you come to list that? And the second one, it's not uncalled for in terms of Shiva Cement or the speculation that's out in the market, because you have been buying from the open market. Do you have a targeted promoter holding target there on Shiva Cement?
So we wanted to cross 51%, which we have done now.
Okay.
So that is why there was a little bit of buying from the open markets. There was a creeping acquisition.
Yeah.
Now, since that's over, you would have seen that JSW has not been buying anything from the open market. So my idea is that I want JSW Cement to have a sizable capacity, as well as a sizable capacity utilization.
Absolutely.
Before we go in for any sort of IPO. Because it's it's very easy for us to become bracketed as a mid-cap cement company, as a regional cement player.
Right.
And obviously the vision of JSW Cement is to be a pan-India cement player which has significant market share. I think at 20 million tons at a capacity utilization of between 75 and 80%, we're looking at 15 to 16 million tons of sales in FY20. That would be meaningful capacity and capacity utilization to go in for an IPO. And that's why the targeted time frame for the IPO is post the general elections in 2019.
2073 has been rewarding for Indian investors, but can 2074 continue the trend? CNBC TV18's Lata Venkatesh and Prashant Nair spoke to 3 of the best-known veterans of investing in India. Akash Prakash, Director and CEO of Mansa Capital, Manish Chokhani, Director of Inam Holdings, and market veteran Madhu Khela. Here's what they make of the market moves as well as the earnings picture.
We've all been making the bull argument that valuations are high because they're on very depressed earnings, right? Profit cycle is very depressed in India. Profit margins are at a 15-20-year low, but we've been saying that for the last 2 or 3 years. So I think there is some sense of fatigue setting in with investors globally, at least for sure, that we need to see earnings now in India. So I've maintained for some time that for this market to sustainably move beyond the range of whatever it is now, around 10,000 on the Nifty, for it to move sustainably beyond that, I think we're going to have to see earnings delivery come through pretty strongly. I don't think we can expand the multiple much more from here. And because we've been talking about earnings recovery for almost 3 years now since the Modi government came into power, I think investors are now saying, at least globally, that show me the earnings, and then we'll look at the next stage of India's rise. We don't want to keep waiting for it to happen.
Manish, let me come to you. I mean, just to expand that point, and here are some numbers basically. From the 1st of January 2014, or that is basically the last 3 years and 10 months up till date, if you take about 900 stocks on the NSE, I mean, essentially, that is a group which has got a market capitalization of more than 500 crores. 70% of the stocks have doubled. 50% of the stocks have gone up 3 times. And about 40% of the stocks are up 4 times.
That's right.
I mean, it's been staggering, really,
Staggering, absolutely.
the performance. I mean, just take off on that point.
And, well, like Akash said, a lot of it has really been driven by PE expansion rather than earnings. And we, of course, got this glorious bull market in mid-caps and small-cap stocks, which has lifted the whole tide. But reality is this, that the opportunity still exists in India. People have been wanting to take that longer-term bet that earnings will come. And like Akash alluded as well, that profit margins in India as a percentage of GDP are now sub 3%. At our peak, I think we were close to 7%. So even if we don't go back to the glory days of the 2006-07 bull market, and you get to even 5%, that's a 50% expansion in earnings possible, which itself, say it takes 3 years to happen, gives you a 15% CAGR just on that basis. Plus, you have underlying ROEs of these businesses, which we have gone to an all-time low of sub 15%, which means that compounds at 15, and you get this 15 catch-up, so that you end the bull market closer to a 22-23% type ROE. And it is very possible that it happens. Take the flip also, when we make the argument that investment cycle is not reviving. The fact that it's not reviving means capacities are underutilized. So as you get operating leverage, you will get the earning multiple, the profit margins going up. As the margins go up, you get order books. As you get order books, you start getting the engineering side of the market also participating. And then you get a whole full-fledged bull market. So currently we are running on one engine, which is consumer. The export engine hasn't really been running. It's coming back now. And the whole investment segment of the market hasn't been performing at all. So if you disaggregate in that context, there is, like Madhu's famous words, picture abhi baki hai. There is hopefully a lot to come here.
When do you think earnings will bring that much expected uptick? I mean, we've been waiting for it for 3 years now. Every time we say second half mein aayega, second half mein aayega. Abhi ye second half mein aayega.
No. Let me also put a different context to this whole earning argument. First, let me say, even I am cautious and worried that some pockets are seeing excessive valuation. Having said that, when we look at it from a market perspective, these earnings are also a factor of where the interest rates are and where the global valuations are. So, you know, if you have 6.75% bond yield, and if you have 9% bond yield, then your even a 15p will look expensive. But if you have a 5% bond yield, then 25p will also look cheap. Because it is ultimately a contest of where the interest rates are, and that is what even globally is happening. That, you know, as Manish was saying in a previous show, that if I can earn 2% interest rate in any fixed income product, which means effectively I am willing to give 50p to buy a business which has a 2% dividend yield. So when we look at in the historical context, these PEs, our earnings are looking far more expensive than what they are in real life considering today's situation. And the hope behind, one is the earning recovery hope, and second is also that eventually interest rates will fall in India.
Akash, earlier this year when I spoke to you, you called the markets right. You said we will touch new highs and linger there for this year, while the GST chaos sorts itself out. Now, what's the call for the second half?
While you will see strong earnings in December, hopefully, people may not take it fully because there was the demand base effect. So I think March is really the first quarter where people will look at earnings very, very closely to really kind of get a sense that what trajectory are we on. So I think the market is in a trading zone around these levels, 9,500 on the Nifty, 10,000, 10,200, whatever, something like that for the next 3 to 4 months. And then if the earnings delivery does come, which I personally think it will, you will start seeing some signs of sustainable recovery, then the market will hopefully move into a next range of, or the next growth spurt or the next upcycle. But for the next 3 to 4 months, I don't expect the market to break out sustainably from here. I think we need to see the earnings, as I've been saying, and we need to see it on a sustained basis.
All right, then let's get on with some earnings that are expected today from the banking space. Axis Bank's quarterly numbers are going to be delivered sometime later today. The asset quality is really going to be the key point that we'll be looking at. Abhishek joins in early this morning to give us a quick preview. Hi Abhishek, good morning.
Good morning, Nigel. So asset quality will be the key factor to watch out in the Axis Bank result. Now remember, the watch list was at 9,500 crores, forming 2.5% of the book. So how that performs will be seen very closely. But the most important point will be the slippages. Now overall slippages last quarter was at 3,500 crores. But out of that, the non-watch list slippage was at 2,722 crores, which was at all-time high quarterly run rate of slippages for Axis Bank. So what does the non-watch list slippage constitute, and how much of it comes from watch list will be seen very closely. Gross NPA below 5.1% will be very positive. Remember that in the last few quarters, the NII growth has been in lower single digits or sub 5%. So NIM above 3.65% will be very positive. Our polls suggest an NII growth of close to 5%. Due to low base effect, the profit is being seen on multifold.
It's done more than 12%, so you just pull up that time chart as well. In terms of revenue as well, top line, we're expecting a growth of close to around 12%. The entire volume jump, entire top line jump is going to come because volumes are expected to jump by around that 12%, coming at around 5.7 million tons. Why is that? Because in fact, they've ramped up capacities in East India. Demand has been strong as well in East India, so that's what helps them. And in fact, remember, this is coming on a low base. In the same quarter last year, there was a degrowth of close to around 10% approximately. The company has also been indicating that their premium product business has been doing quite well. So the top line grows by around 12%. Everything comes in from the volumes because the realizations more or less flattish, or in fact a bit of a positive bias. Moving to the operating performance then, we're expecting the operating profit to come in higher by around 14%. Margin should be more or less stable. Why is that? Because remember, in fact, ACC, they'll be hit because of higher diesel cost. That should impact the freight cost. Also, we have higher maintenance cost that could play out over there. And even in the last quarter, they had mentioned that petcoke usage has increased and petcoke prices on a year-on-year basis are up roughly around 15 to around 20%, just depending on where you're starting that mark. The profit number as well will look good. That'll more than double. This will be aided partly maybe by taxation as well as other income. Also, Anisha, you need to keep in mind ACC, because we here at CNBCTV18 had alerted our viewers that in 2013, well, they had done the entire rejig in the ratio of 6.6:1. So there was a bit of an arbitrage opportunity that is playing out over there. Currently, the arbitrage between ACC and Ambuja, well, the ratio is currently at around 6.4 approximately. So that opportunity has reduced. But in the last 10 days approximately, we have seen that ACC has outperformed Ambuja Cements primarily because of this.
Let's head across to the commodities corner and get in Manisha Gupta, who joins us now with all the update what's happening in the world of commodity. Well, good morning, Manisha. Happy Dhanteras to you. Precious metal will be on top of your mind?
Well, absolutely. Happy Dhanteras to you and everybody else. Well, yes, and the gold and silver prices, which have been heading higher, we did see them trading at a 3-week highs yesterday, have seen a bit of a decline come in. Well, you have seen the global equity markets in Asia, in US, continue to hit record highs on a weekly basis. That's taken some money off from these markets. And apart from that, there has been a bit of a rebound in US dollar that has put pressure. So you saw the gold prices come off 1,300 highs that we saw in the markets yesterday. But having said that, the physical buying in India is expected to pick up, and the global markets would keep a keen eye on this, because everywhere else you have the paper gold buying that happens on a very high speed. So whether it's the gold funds, the mining equity stocks, or even the ETFs, it's only in the Asian markets, including China and Asia, that you see the physical buying come in, and that is an added bonus for many of the gold global markets. So the numbers that we get out on this week and this quarter would be of most importance. Having said that, you have seen good gains continue in case of the metal space as well. The iron ore prices have continued to gain up. You have the copper prices trading at a 3-year highs as well. So the strong China data has led to industrial metals trade on the higher side.
Okay, all right, Manisha, thanks so much for that. Well, let's shift focus then. Let's hop across to Mangala Malu. He's joining in to tell us what's going on in the derivatives market. Hi, Mangala, morning.
Good morning, Nigel. This Dhanteras, a lot of Dhan was added by the FIIs in the index futures space. In the cash markets, they sold about 30 crore rupees, which was the smallest number that they sold since the time they bought, which was on September 15th, 2017. But take a look at the index futures. A lot of money pumped in by the FIIs. Number should come up for you. Close to 2,500 crore rupees added in index futures. And if you take a look at the contract additions, close to 30,000 long contracts added, 2,000 short contracts covered. So they really went all out. Remember, the start of the series, the FIIs, they were long, what, 56%? And now that number has risen to 63%. Most of that happening only in the last couple of sessions. In the index options too, they went all guns blazing, 950 crore worth selling. And if you take a look at the long additions in index calls, they added close to 11,500 calls and they sold about 18,000 puts. That could be a little jittery given the fact that the Nifty put call ratio at 1.68. I don't remember the last time I saw that number. Looks like it is a multi-year high out there. The 10,200 put, that one added close to 22 lakh shares, 10,250, all the way up to 10,300 puts were written as well. The 10,400 calls, they saw some writing too, so that one should come up for you. What is interesting is right now there are more puts in total open interest than calls, to the extent that even the 10,200 October call has less open interest than the 10,000 December put. So keep an eye out on those data points.
Okay, all right, Mangalam, thanks so much for that. Well, on that note,